Good afternoon. This is Ken at Tortoise Capital with a multi-time frame, multi-lens analysis on SPY for August 11th, 2019, serenaded by the Huskies in the background. So looking at the monthly on the SPY, we had that long uninterrupted run up to almost 300 that started in a summer. So it was fall and summer, continued all the way till the last quarter of 2018. Doji, two harsh sell-offs, a little intermediate, and then a second sell-off. Big gain, Doji, one, two sell-offs. And now we're in the month after a Doji month. The last time it did that, it was here and here. So that's why we're mindful of the downside potential here. The Bollinger Band means at 270. The PSAR at 245. So there's lots of room for this to run down. Low of the month around 280. Pushing near the highs, so we're in the fall. This little recovery this month, however, is starting to threaten to be another Indian summer. So the upside is definitely potentially there. The fact that we've already recovered this much off the bottom from 280 is promising. Critical state on a monthly basis, vulnerable bull market here as we start entering the silly season for politics. Very strong support here. There was lots of buying pressure at this price level too. Right? Lots of buying pressure right there. Mostly buying pressure at prices above this level, so I am cautiously optimistic on the monthly. Now, taking a look at the monthly on the SPY with the RLFF framework, you can just see the greatest bull market in history. And the 10, the 30, the 90, the 30 has budged, but all three are now well above the dragon. The strength of the move has been increasing. You notice the width of this Bollinger Band on the RL270 widening, but just how far this can fall back to fair value. That's really back around 240. Bottom of the dragon I would take as the boundary of noise. That's about 280. 290 being the skin of the dragon. So anything north of 290 is still tactical noise as far as this is concerned, but still looks pretty promising. And still well in the in a resumption of the summer after this pullback, fall into the summer into fall and resuming. Since we're here, we'll just dial down into the weekly on the RLFF. And now you can see the magnitude of the moves away from fair value that are available to the downside. That's mirrored almost to the upside here. The 10 and the 30 have rolled over. The 270 and 90 are solid here above the Bollinger Band mean of the 270. So 290 still looks like fair value. Anything north of that is outsized gains. We had the second leg of summer up, rolled into the fall, and now testing at the edge. I see this on a weekly basis being a critical state. If this can find support here and resume, then it's got to test 300, and then the next leg up would be to 315 or 320 on the basis of how long these these multi-week moves can last. So support anywhere north of 290 can get it back to, I'm going to say 310 on the upside. But we've already had 1, 2, 3, running out of steam. So guard against the downside. Now shifting back to the weekly. Sorry, let's go to weekly. Last week was favorable. It came down and tested the PSAR, so there was a bit of a PSAR flip, but it closed strongly and above the fair value. The 90 and the 270 acting as fair value over here at 290. That's the critical state. As long as it stays above there, off it goes. It doesn't break out officially until 302. And that's when it breaks above the RL10, the 30, and the PSAR flip. It's got to get through the dragon around 298. So this is all tactical play from about 292 to 300. There's reasons to believe in it. There was this move from 275 to 300. After this little sell-off, the recovery moved all the way to here. After the harsh sell-off, then this recovery, that's what this looks like. There was a PSAR flip here. And then there was a real nice move from 240 all the way up to 285. Now, that's going to be harder from here, but the fact that it already found strong support and there's been a big bounce already off 280 means there's some comfort in buying. We're in the fall, but getting ready to just cross into the summer. So more buying pressure this second week, and now we'll determine, does it look like this? Or like this into a doji, or is it one of these and then sell off? So those are the three cases. Cautiously optimistic here, and our support levels are in place. A couple things going on the daily, and now this is where the cognitive dissonance comes in. So we've had a summer, fall. Then this harsh sell-off, a 4-day harsh sell-off, brought us into the winter. So we're entitled to be very wary of the downside. And with 280, as we said before, which is the 200-day moving average, being the important technical support. However, that was Monday and the open, and then we finished strong. Had two chances to crack, and it didn't, and finished strong and held overnight. And then a big move on Thursday. And then I think cautiously optimistic on Friday as people cash these gains, but then there was no runaway sell-off. So I am looking to see what happens tomorrow. I'm expecting a breakthrough of the PSAR flip right here at about 295 and to get through the dragon, back to the Bollinger Band mean, then a test of the top of the dragon at about 300, then the RL10 at about 301 and 2. And then if it gets above there, as Bob Gardner would say, that's the candle negation that defeats this harsh sell-off. So, critical state, winter, but reasons to be optimistic and clear price levels above and below. So this is going to really favor the short-term trader, maybe on the hourly or 30-minute charts to get some initial positions and take advantage of these large range intraday directional moves. Use that to build positions that you want to carry overnight when you feel like you need to carry it overnight. But I'm shortening up my time horizon and acting accordingly. Let's look at the RLFF. We'll see basically the same. You can almost see that from here. The distance from fair value to the stretch is the distance from 287 to 302. So that's $15. That's how far the traders can move it away from fair value. The last time they did that, that's how far they could move it. And now this time it collapsed all the way back to fair value, held support, didn't overshoot, and started the rebound away. And that's why I'm cautiously optimistic. So if I look at the belly of the 10, and the belly of the 10, that's rising lows. And there's reasons to believe that could be support. If we get any kind of buying pressure this week, winter will become spring. Then you can really be optimistic on the swings and then play for the next leg of summer going up. But again, it's nothing until it gets above 302, and that'll be a real challenge because we've had 1, 2, 3, 4 bites at that, and each one has been accompanied by a pause and a test. And each test is getting a little bit larger. So I'm ready to go in either direction on that. I'm going to skip right to the hourly, and the dragon has turned at 285. We said 280-ish. Otherwise, the belly of the 30 is kind of that longer-term Bollinger Band mean on the daily chart. But on the hourly, it already turned and found support here around 285. Yeah. One pause, and resume. So I take this to be when I see this on hourlies, that's very positive. You have the 10, it breaks through on the first RLXD, pauses, and then exits the second time without ever even coming through the dragon. That's very favorable. So that little entry right around 287 for the 7th and the 8th set us up for really nice moves right through here. And this was not much sell-off at all. And look how long they were willing to just hold it in the rest of the day. There was one little run, I think, to cash the gains from this move, and then a little bit of buying pressure to bring it back to fair value. And so no sign of panic there. That's longer-term fair value up here. And then the test of 300 soon to follow. And on the hourly, summer, fall, we're still above the zero line, so we're still positive on this, and off it can go. So I'm very optimistic about this one. So now we're looking at 15-minute charts. That's just the default in TC2000 for a weekly view. And now I want you to notice the fidelity on the dragon here, the belly of the dragon, a higher low of the dragon, the 10, a higher 10, then the second RLXD, bang, right there at 286. Then you have a nice orderly move into the close, and it resumes the following day with a really powerful move. And even Friday's price action now looks like a pretty quick resumption, and up it goes. Still in the fall, everything looks favorable. VWAP is at 291. There was declining volatility in the afternoon and going into the weekend, so I take that as a positive sign. Okay, so now to bring it back into our standard daily chart and market health check. Start from the bottom. We're in the winter for sure, so we have a cautious frame and we're ready to go short. We've got the 1-day frame here, auto long, auto short. This was Monday's opening last week, so as long as it's holding above 288, I still feel pretty good that it held on to last week's gains. Fair value is at that 288 on the 270. The 10-day and the 30-day low are at 281 3/4. The 200-day moving average around 280, and that coincides pretty nicely with the belly of the dragon for support. The belly of the 10. The PSAR is flipped down, so it's really the short side is the path of least surprise. So the path of maximum pain for people would be for it to actually gain here. The PSAR flip is pretty crucial. I'm going to pull that down just a little bit. So if it gets through 296-ish, I'd take that as a real positive sign. And breaking through the skin of the dragon as well. Then it's up to the hump of the dragon, then the hump of the 10 and the 30, and then it's free and clear if it's above 302. And you can see the size of these moves. One and down, up, pause, up, and pull back. So there we are. Market critical state, ready to go in either direction. It's going to really favor the adaptive, responsive traders who do not have a directional bias but are prepared to go in either direction. So if you listen to the weekend report, we've identified a number of things that'll be of interest based on how they respond to the market. Latin America, Brazil, Mexico certainly being of interest, along with metals and mining. Listen to that one if you need some additional insights. This is Ken at Tortoise Capital. Keep your risk measured and powder dry.